So the US Fed opting to reduce rates by 0.5% in a surprise move that was well ahead of its March meeting. And in this case, it's obviously meant that the US dollar was a relative underperformer in the FX market. Now, in the case of Euro USD, it's taking the price even higher. Traders were already unwinding the carry trade, especially given the fact that the European Central Bank doesn't have as much room to maneuver when compared to the US Central Bank. You can see that although all of its technicals are flashing green, ADX showing an ongoing propensity to trend, the fact is that the underlying movement is relatively volatile, and that means that unless it settles within this range, usually pivot points are much more likely to break. Now, what about traders? In this case, they're both holding a majority short bias at 63%. How they got there, however, differs drastically. COT, they were this entire time, green dotted line, they were holding a majority short bias below the 50% red line. They were holding a majority short bias this entire time. Retail traders, on the other hand, they were actually extreme long at 80% when price dropped into the 107. Since then, ever since that bullish move higher, longs have been getting out, shorts have been initiating, and as a result, they've shifted from majority long to majority short.